Industrial property fundamentals continued improving over the course of 2016. If you take a look at the warehouse distribution subsector, vacancy rates ended the year at 10.3%. That's a 20 basis point decline in the fourth quarter alone, after bouncing around slightly in the first 3 quarters of the year. So if you take a look at the year-over-year vacancy decline, it was quote-unquote only 30 basis points. That's still relatively healthy, with rents growing by both 0.7% for asking and effective rents throughout the course of the fourth quarter. On a year-over-year basis, industrial warehouse distribution rent growth for asking and effective rents grew by 2.1 to 2.2% respectively over all of 2016. What's playing catch-up, it seems, is the industrial flex and R&D subsector, which you'll remember was a slightly more dynamic sector than warehouse distribution before the downturn of 2008. It boasted higher rent growth potential because of their larger office finish. What happened in 2016 was vacancies did end at a slightly higher 11.1% versus warehouse distribution, but the change in vacancies was really much more swift. Vacancies fell by 30 bips in the fourth quarter of 2016, 70 basis points year over year. Rents were somewhat tepid at 0.5 and 0.6% in the fourth quarter respectively, rising by sub 2% for all of 2016. But what we can say about industrial in general is that it's continuing to benefit from the tailwinds provided by what's ailing retail right now. Online commerce, the Amazons of this world, where they still need space to stock their goods. Trade is still fairly positive for the US as a whole, so that's benefiting a lot of gateway cities and transport networks. And by and large, we expect this trend to continue in industrial over the course of 2017.